What's good, everybody? Spektrades back here. In this video, we're going over where is the right place to put your stop loss in smart money concepts ICT. And foremost, my name is Wendell, but I go by the alias Spektrades. I am a full-time day trader and have been in the financial markets for half a decade. I specialize in ICT smart money concepts. My goal is to simplify smart money concepts and help you shorten your path to success. If you want to stay up to date with me, make sure to check out my Instagram at Spektrades. I have been a mentor to over 1,000+ students, and if you want to join me for daily trading plus private lessons, you can just click the link in my bio, find all the links. You know, my Instagram, I post reels and I just post daily markups to keep you updated and always keep you refreshed. Without further ado, and as you guys may know, before we hop on the charts, right, to go over this strategy right here and just understand exactly where we place our stop losses when we are taking our trades, we have to go over our criteria right here, right? I always try to make it simple to understand first, and then we hop on the charts and see exactly with good price data. So right here, as we can see, the number one is we have to understand our strong highs and weak lows and strong lows and weak highs theory. So I had to release a video on that, strong highs and weak lows and strong lows and weak highs. So make sure you guys see that, right? That video right there, right? It will give you the understanding is why is the strong high so powerful and why is the strong lows powerful and why price will always seek to a weak high or a weak low. So as you guys can see, just for a quick recap for the strong highs and weak lows. So for a high to be strong, it has to take out liquidity from a previous old high and then give you a breakup structure of the low that give the liquidity sweep. So for this high to be strong, it has to give a liquidity sweep of the previous old high and then give us a breakup structure of the low that gave the liquidity sweep. So a liquidity sweep and then a breakup structure, and then now we have us a strong high. Once now this high becomes strong, now price will not violate it. When price returns, as you guys can see, when price returns, right, our zone will be respected because this high right here is strong. Say this 15-minute order block trade right here is your first trade, as you guys can see, and you place your stop loss up here. Price will not come up here and violate your stop loss because this is a strong high. So you can place your stop loss at these strong highs, or if you're a more lower time frame scalper, you can catch you right when price comes in, tap inside of this 15-minute order block. You can scale down now to the 5 minutes and then catch you a 5-minute entry, and you're looking for the same exact thing for the entry, a liquidity sweep inside of the zone, clean, and then you're looking for a breakup structure of the low that gave the liquidity sweep, and now you can place your stop loss at this strong high right here because price will not violate it. And then for number two is we have to zoom out on the higher time frames. We have to observe the higher time frame first, right? So for the lower time frame traders, like the day traders, you can start from the 1 daily to the 4 hour, and then your lowest time frame is like the 15 minutes to the 5 minutes. And then for the scalpers is for the 1 hour to the 15 seconds, right? You can go as low to the 15 seconds where you can see extremely precise price action, right? So that's number two, right? Is to zoom out first, do a top-down analysis. I have plenty of videos on how to do a top-down analysis on my YouTube channel and during the free course that I have down below. So make sure you guys check that out also. It's 1 hour long, so just go through that free course and you're gonna understand exactly how we go from the higher time frames to the lower time frames and catch us sniper trades. And then for number three is we have to identify our higher time frame zones. So as you guys can see here, we waited for price to pull inside of this 15-minute order block right here. So inside of this 15-minute order block, that's when we scale down now to the 5 minutes. So we waited for price to tap into a higher time frame zone. The 15-minute is higher than the 5 minute. On the 5 minutes, we're gonna see a more defined price action where we're gonna see another liquidity sweep in a breakup structure, and then we're gonna be able to place our stop loss even smaller, right? That's when we minimize our stop loss even better, right? That's when we scale down on the lower time frames because now we are catching a more sniper entry. And then for number four is we have to identify our range, right? Your premium and discount zone. So let me remove some of these right here. So as you guys can see, when price taps into our 15-minute order block, right? Just like I always say, we always use our Fibonacci clean. We use our 50%. We have to wait for price to pull past equilibrium, right? Equilibrium is the 50%, and up here is premium, and here is discount. If we want to sell, we have to wait for price to pull into premium, and then we sell. So our point of interest was this breaker block right here that pushed inside of this 15-minute order block. So we just came back and tapped into it to push lower. So this is our entry right here inside of a premium zone, right? So always identify your range. Your first, right? Identify your range from this high to this low, right? Inside of this high to this low. So this was my higher time frame range, and this was my lower time frame range, right? Higher time frames, lower time frames, right? And then we remove this right here. So identify your range and then identify your premium and discount zone. And even this right here, if you can grab it, as you guys can see, this sell right here, price came inside of this 15-minute order block inside of our premium zone, right? Premium first, right? So identify your range and then execute and place your stop loss at strong low or strong high, right? That's the last and final step. Always place your stop loss at a strong low and a strong high, because once you identify your range from this high to this low right here, and then you know that price needs to cross past equilibrium, right? You can wait and wait for price to tap inside of this premium zone, and then where do you place your stop loss? Right at the strong high, just like you see right here, right at the strong high. Just place your stop loss at the old high. You're just gonna be safe, right? Price won't come up here and violate you. You don't have to run out of it, right? You can just place your stop loss and just leave it alone, right? You can do this on the lower time frames and the higher time frames, right? It just depends on which type of trader you are. Or you're a day trader, trading on the 1 daily to the 4 hour, and then you entering on the 15 minutes to the 5 minutes, or are you a scalper from the 1 hour to the 15 seconds, where you are just in here, you're placing your trading, you're placing your stop loss, and you're just waiting for it to just boom to execute right in front of you. So where we place our stop losses at our strong lows and at our strong highs. So now let's hop on the charts and see exactly how these look like. So as you guys can see here, we're just gonna start off on the 15 minutes. So on the 15-minute time frames, as you guys can see, price was building liquidity here since yesterday, I would say, and then the Asian session liquidity was right inside of this range right here, right? So price was building this liquidity range. I'm gonna put this red so you guys can just notice it. So clear, right? Price is just building this liquidity, right? So I already created a video of the power of 3. You guys already know this. It's called the power of 3 accumulation, right? We're just looking for a manipulation of the high or the low, right? Whichever one, right? So accumulation down here, and we're looking for price to distribute, right? To push higher, right? Accumulation, manipulation, and distribution. This is what we're looking for right here. So as you guys can see, price was doing the first phase right here, accumulating, right? Accumulating orders, and then during the pre-market analysis before price opened, right before news today was CPI and Fed Chair Powell speaks. So as you guys can see, I had marked out these lows right here during the pre-market outlook for the Patreon. I told the Patreon that these lows gonna get purged through, and purged. Price came and cleared them out. Now that sell side gets taken, right? What am I looking for? I'm looking for these old highs now to get taken, right? So now that these old lows didn't hold, because if these were strong lows, right, let's just keep this in mind. If these were strong lows, they were hold, right? They were hold, but price just came and purged through them like hot butter. Now these right here, these highs will get taken now. So now after these lows get taken, now I have my liquidity sweep. Now I have to scale down on the lower time frames and see where I see my break structure. Now let's get down to the 5 minutes. And now, as you guys can see, after price has cleared these old lows right here, price gave us a breakup structure of these old highs right here. Price came back but failed to go lower, and then give us a breakup structure, and then go back lower, and then push back higher and give us a breakup structure. So now price is pushing higher now, creating higher highs and now higher lows. So now I'm looking for now this high right here on top of this Asian range in this consolidation to get taken now. And now let's get down to the 1 minute and scale down lower and see exactly what do we see. And now on the 1 minute is two zones that I was looking for, right? I was looking for this order block right here. As you guys can see, this big bullish candlestick right here. I was looking for price to either pull back in here or either come back down this zone right here, this bullish engulfing order block down here. But also, as you guys can see, the price has this fair value gap here and tap into this IPA, right? That came and gave us this breakup structure. So price came back down inside of it and give us a liquidity sweep and a breakup structure. So now right here, this was like a strong low to me, but also this was kind of looking like relative equal lows too. So I had just marked this out as inducement. So if price would come down all the way, right, I would be like, okay, I see what price is doing now, right? So, but it wasn't until I scaled down to the 30 seconds, that's when I had noticed this 30-second order block right here inside of this 1 minute IPA. As you guys can see, price came down, give us a liquidity sweep and a breakup structure. So now I can trust this low now to hold. This is my strong low, and price came back into it, and I'm looking for the same pattern to happen again inside of this zone here. Also, the liquidity sweep and a breakup structure, as you guys can see. So now when price came down inside of this zone right here, as price is digging down inside of my point of interest, I scaled even down even lower. Now let's get down to the 15 seconds. And now on the 15 seconds, as you guys can see, price had left this order block right here, this bullish engulfing order block in, but I trust this low so much, right? Because price took liquidity from this old low and gave me a breaker structure. So now this is a strong low. So I trust this low so much that even though price is pushing down, right? Like now look at this right here in drawdown. Would you be scared to hold your trade? Now let's play price and see. Would you be scared that price will push down and purge through your strong low, right? So price gave you a liquidity sweep in a breaker structure inside of a higher time frame zone. Now, right, so this was a 30-second order block. So price gave you a liquidity sweep in a breaker structure inside of a 30-second order block, as you guys can see here. Liquidity sweep, breaker structure. So now we can trust that this right here is our strong low. So now let's play price and see why we're not scared when price is pushing down strongly inside of our zone. So you guys can see price pushed down once, retested again until price came and purged these old highs right here. I will put the screenshots right now. As you guys can see, this was my entry. This is the before and these are the after. I took screenshots while the trade was going on the Patreon live, right? So we are not scared as price is pushing down. As price is selling, I am buying, right? As soon as price step into my zone, I am buying as price is selling, right? I always advise all my students to do this right here. It just gets you comfortable, right? So as price is pushing down, I'm buying right here. So I get the wick and price just wakes up and I get that sniper entry to my old highs right here to come and clear these old highs. So I hope you guys understand exactly now where you guys place your stop losses at and exactly how you can trust the strong highs in the weak lows, right? So as long as you have a strong low and a weak high, price will respect that strong low and go and take out that weak high. And if you have a strong high and a weak low, price will now respect that strong high and then go and take out that weak low. So I hope you guys enjoyed this video. If you are interested in joining my Patreon, it's patreon.com/SpecTradersHub or the first link in the description. And right here we have the Spektrades Hub where you can access the live trading with me every single morning on the Zoom calls. And right here we have our main scalping mastery strategy course right here that we have also. So is it. I hope you have a great rest of your day. Spektrades out.